Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Airaj.
Good morning, Devina. Interesting day of trade. Lots of macro opinion awaited, but maybe we'll go back to global, following the global trends.
Yeah, I mean, Friday is also going to be important, with Jerome Powell's address at Jackson Hole and what he indicates with regards to the outlook of future rate cuts. So that's something that will probably drive some interest or and the other interesting part, obviously, is I was reading a report and how the bond rally has completely evaded India.
Yeah.
It's just completely, but the rest of the globe is seeing yields come off sharply. India, on the other hand, has completely washed off the gains from budget, and now they've actually started to move up, quite contrary to the rest of the globe.
Well, if you want a stimulus, you got to pay for it, I guess.
And that's probably something that's keeping the markets on its toes. But it's interesting how, in the hopes of this stimulus, in the last 1 week, everyone's been waiting with bated breath, just trying to see what the government can do.
Just ill-advised to time this for sure. But, I think the pertinent points, the bond rally, the stimulus, and all of that to be watched out for. However, equity markets done in a scenario like that, we've been speaking about how we've been following the global trends, but are there specific nuances within the that the derivative space is indicating the day before expiry? Navneet is standing by with the FNS setup. Morning, Navneet.
Good morning to both of you. Well, if you look at the cues from the derivatives market, we have seen some fresh positions at least coming on the Bank Nifty futures side. But for Nifty futures, which closed at a premium of about 11 points, saw open interest inching higher by almost 2 to 2.5%. But I was talking about Bank Nifty. Remember, it underperformed Nifty yesterday, and there was unwinding seed. But overall, if you look for the week, there are fresh positions which have been added on Bank Nifty. The futures premium has come off substantially from the time the series was started. It's just at about 12 points. And looking at the options data, even if you look at the concentration now for tomorrow's expiry, it's indicating it's giving you a range-bound bias actually, because maximum open interest on the call side is at 11,100 and put side at 11,000, followed by the 10,900 strike. What happened yesterday? Let's just pull up that in terms of change in open interest. Unwinding we're seeing for the 11,100 put strike, whereas the 11,000 call saw maximum open interest coming by. So the range probably you can look at, looking at the premiums also, considering tomorrow's the expiry is at 10,850 to about 11,150 on the upside. In terms of stock futures to watch out in today's trade, Mahanagar Gas saw fresh longs after the supply overhang was removed. BG Asia sold 10% stake. Economic Times paper today has reported that promoters are looking to sell 10% stake for 1,200 crore rupees, and the stock was up. That's Max Financial Services, which saw fresh long positions. NMDC fresh shorting seen. The stock was down about 10 to 12%, and Britannia was the other stock from the FMCG space, which fell over 3%. That one also saw fresh shorts. Very quickly on the FI front, there were some long positions added on the index futures, but the ratio is still on the short side. And on the index option side, ahead of expiry, you did see more of shorting coming by because there were more contracts added on the put long as well as the call short side. With that, it's back to you guys.
All right, Navneet, thanks very much for that. So that is what the FNO setup looks like. Pankaj Pandey, head of research at ICICI Direct, also joins in right now with his views. Pankaj, thanks very much for taking out the time. And I want to come first off to you with Yes Bank. I mean, this one, being an index stock, is being pummeled almost on, on every second day basis. There's something or the other that comes about, some stressed accounts that it has exposures to, and then the stock just gets beaten out of shape. Now at 71, what would the advice be? Now, when we talk about putting money into Nifty 50 stocks, the larger cap names, if they start to bleed money the way Yes Bank has, then where should you turn?
So, hi, good morning. I think on Yes Bank, the expectation was that the company would be raising somewhere about 10,000 odd crores going forward, and with the kind of QIP what they've come up with or closed, I think the fundraising has been lower, and I think with the kind of spate of news flows, negative news flows still coming in, probably the fund requirement for the bank could be even more higher. And which is why even at current levels, it does not look like the stock is going to stabilize. And I think, so from that perspective, I think the fluidity in this stock is going to persist. I don't think that the current levels are the bottom given these sort of news flows which are still sort of panning out. And unless fundraising does not sort of pick up pace, the challenges for the stock will remain. And I think for somebody who's sort of holding Yes Bank, I think it is better to sort of prune their holdings and be lighter on the stock.
Okay, got that. The other pocket yesterday that was active was the auto space. So after a lot of headwinds that we've seen, which have not gone away, by the way, they're still there. But some green shoots in terms of some pricing action that we saw in yesterday's trade. So all of the auto stocks, the OEMs did well. Sans, I think, and Eicher Motors. But Maruti is back at about 6,200. Pankaj, what would you do here?
So auto, we were expecting some kind of a technical bounce to sort of happen, and that is what is sort of panning out. I think all this is a good opportunity to exit, because I think some of the pockets, say for example, PV looks, the problem looks far more structural than the temporary. So I think the kind of shift what is anticipated, wherein the mobility is shifting from private to public. Plus, I think on the CV side also, largely if you look at with the revised Excel load norms, along with the efficiency gains from e-way bill implementation, I think all that has led to excess capacity, and which is why the numbers are likely to remain muted for most of the players. I think at best, with a good festive season also, we would be looking at a 2 or 3% kind of a degrowth in the sector this year. And I think something like Maruti still is trading at quite a higher multiple compared to the kind of growth what they will be delivering. So from that perspective, I think the kind of bounce what we have seen, I think one should be sort of exiting auto as a pack.
Actually, a few people who saw the interaction yesterday called me and said that he sounded a lot more positive about the outlook than he has sounded in the preceding week.
A lot of caveats, a lot of ifs and buts.
As would be, because the future is so uncertain.
And the timing of the road tax, banks, and a bigger push towards the dealerships.
Yeah, I just got a sense though somehow that maybe he was saying that the devils are now all known. If some of these known devils are taken back, then it's a net positive. Hopefully, if no other negatives come about, then Q3 and Q4 could be it. Now, I don't know. This is just this is a feedback that I got from 3 or 4 people who called me and when they saw the interaction yesterday during the day, and then said that he sounded a lot more optimistic. I don't know if frankly that or some of the other factors were the reasons why the stock did well, but hey, it did reasonably well in the session yesterday. That's one. The other, Pankaj Pandey, and the set of stocks which somehow haven't quite set the stage on fire, but we did a piece on this just a while back, is large cap IT. And very interesting that when you rank them by the P multiples 1 year forward or TTM, the 3 cheapest names are HCL Tech, Tech Mahindra, and Wipro. You have the large cap names cheaper than the mid cap names. Do you like any of these 3 names?
So within tier ones, if you look at, I think the primary pick or the top pick would be Infosys, wherein I think the company can deliver lower double-digit kind of a top dollar revenue growth, and it is still trading at about 16-17 multiple, relatively cheaper to TCS, which will be delivering similar set of numbers. I think for HCL Tech, the problem is that the organic growth is still weak, and even though the stock is cheaper at about 10-11 times, I think you still don't get the confidence. I think on the Wipro, we are far more optimistic given the fact that while they have been sort of delivering quite lower growth compared to the overall industry players. But I think we would expect that their growth will sort of pick up. So Wipro is something which we sort of prefer. Tech Mahindra is also fine. But I think Infosys looks quite good given the overall growth, what it can deliver, and the kind of multiple it is trading. I think mid-cap ITs are also relatively fine, something like Sonata Software, which we have seen in terms of delivering decent set of numbers. So, but largely I think mid-cap IT stocks have largely disappointed on the growth front.
Well, at some point of time in the show, we'll also discuss a couple of other stocks which have corrected quite a bit. One might not quite realize it, but State Bank of India, from levels that it used to trade at, is trading at 283 rupees. It's come off quite substantially. At 310, 315, when the talks of the QIP were on, everybody was bullish. The last 1 month performance has been fairly lackluster. So we'll talk about this, talk about maybe Tata Steel and a couple of other names in a bit. But let time now to go across to our research team to try and figure out what are the stocks that are in news today that you should watch out for. Some key brokerage recommendations that have come out today as well. Yash as well as Darshan join in for that. Good morning to both of you. Yash, let's start off with the stocks and news first.
I'll start first with NMDC, and we had the news come out yesterday, but the official confirmation from the management came out post-market hours, wherein they informed the exchanges that the Karnataka government has indeed decided to cancel the lease given to the company for the Donimalai iron ore mine and has put it under auction, which is a big negative. Because of this, we'll see an immediate impact on the volumes for the company, and most of the brokerages, they have a negative view on this development. Next up is Dr. Reddy's, wherein the company has received 8 observations under the Form 483 by the US FDA for its Vizag Unit 1 facility. Now, in terms of its significance, it is an important facility because it contributes to nearly 8 to 10% of its overall US revenues. However, in a report from Citi, they say that the action is routine in nature and would not mean any meaningful disruption for the company. On the other hand, we have seen that Alembic Pharma, that one has received a clean sheet from the US FDA, as it has received 0 observations under the Form 483 for its bioequivalence facility in Vadodara. Positive news coming in for Deepak Nitrite as well, wherein ICRA has upgraded the rating on the long-term rating to A plus from AA minus, as well as changed the outlook from stable to positive for the company. HDIL will also be in focus after the company has been admitted under the insolvency and bankruptcy code following the application submitted by Bank of India. In terms of key bulk deals, HOAC would be in focus after Fidelity Funds acquired close to 0.5% stake in the company yesterday, and Mahanagar Gas, where we had BG Asia Pacific sell close to 10%. The buyers were the likes of HDFC Mutual Fund, Goldman Sachs, SBI Life, and other key large domestic as well as foreign mutual funds. So these are the stocks you need to watch out for in trade today.
Okay, Darshan, what about the key brokerages?
Yeah, so a couple of brokerages. NTPC had an analyst meet, out of which Macquarie has come out with a note. No doubt they've cut the target price to 141 from the earlier 148, but they maintain an outperform. They say that the NTPC is targeting a 15% CAGR in the regulatory equity base over the next 4 years, and they expect double-digit earnings growth from FY19 to FY22 with a high dividend payout of 50 to 60%. The stock is a good buy in the current uncertainty. After Jefferies upgraded MGL yesterday after the block deal, Macquarie has also upgraded the counter with a revised target price of 950. They are saying that the impending overhang with the Shell selling stake is now out of the way, and they see MGL as a cash machine and expect a robust FCF generation over the next 3 years. And finally, UBS has come out with a note on the oil marketing companies. They see a 120 to 200% potential upside for the oil marketing company if the strategic deal of valuation of Reliances are also put into the same businesses of these oil marketing companies. They say that BP's entry into India's fuel retailing signifies long-term value and potential, and oil marketing, refining and petchem is undervalued at 36% discount to Reliance and Saudi Aramco's deal. So they reiterate a buy on all the oil marketing companies.
Well, interesting. Thanks a lot for that, Yash, as well as Darshan. Actually, I wanted to come to you for a stock in news, but let me start off with the OMCs. The views are divergent out there, Pankaj. Somebody reiterating a conviction call on all the OMCs. There is an equal number of brokerages which dislike these companies. What's your view and why?
So largely, if you look at whether you look at upstream or downstream, see the volume growth is going to be anemic. And then given the fact that the government is going to push e-mobility going forward. Also, one needs to look at the GRMs are far more, though they have sort of bounced back from lower levels, but the GRMs are still quite weak. And I think if there is some value, it is on the retailing side. But which is where I think what needs to change is that, see, globally, if you look at bigger players are sort of migrating in terms of generating more of non-oil revenues from the retailing vertical. I think in India that is yet to sort of happen. So while these stocks look cheap given the fact that they trade at 6 to 7 kind of a multiple, but I think market clearly does not like companies which are offering no growth. So from that perspective, the entire upstream or downstream, according to us, is it should be avoided. I think gas as a space is far more lucrative given the fact that you have a scope for volume growth there, and I think that is one space one needs to look at in the entire oil and gas space.
Okay. Stay on with us, Pankaj. Lots more to talk to you about. But in the meantime, let's also bring in our technical experts. Gaurav Bissa at LKP Securities is joining us on the show. Along with him, Chandan, Taparia, Motilal, Oswal Securities is also here with us. Gentlemen, good morning to both of you. I'll start off with you first. Gaurav Bissa, 11,000 still being held on to. What's the sense now, and what could the trade be?
Good morning. The trade setup or the data so far, again, we have been talking about the range predominantly 10,900, 11,200, and Nifty has been trading accordingly. There are a couple of positives for that. One, if you look at the option chain, you get a picture where we have seen the earlier comfortable writing was seen in 10,800 put options. That is now getting shifted to 10,900, 11,000 put options. There are still some writing in 10,800, but I'm talking about the comfort level with which participants are writing. That again shows you there's a shift in the confidence where 10,800, which is a strong support, it is now going towards 11,000 mark. So for me, that is a positive sign. Also on the daily and hourly charts, there's a good support on Ichimoku charts at levels of 10,980. 11,000 mark. So any dip towards 11,000 can be bought. It would be a trading bet where you keep a 50-point stop loss on the upside. 11,150 is what I would be playing for. There's a good amount of writing in 11,200 call options. So unless we don't close above levels of 11,150, I would not be gearing for a larger targets. But for now, I think for next 1 or 2 days, one can buy at 11,000 50-point stop loss.
Okay. Gaurav Bissa? I'm sorry, Chandan, Taparia, what's going to be your trade for today?
Yeah, good morning. The market has been consolidating in a range between 10,900 to 11,150, 180 from last 6 to 7 trading session. Dips are being bought, but at the same time bounce are being sold in the market, and in fact the option data suggests the same. On the monthly contract, the maximum call OI and put OI both are at 11,000 strike, which indicates that market is likely to be in this range plus minus 150 200 points for next 8 to 10 trading session. So it seems that we are likely to be in a range, but the way put writing is seen at lower strike and market is witnessing buying interest at lower zone, some sort of bounce cannot be ruled out. So it is opening negative below 11,000. So I think the 10,980, 11,000 zone could act as a support, and because of that again bounce could be seen. So I'll use this opportunity to play the bounce back move with support stop loss of 10,935 and expecting it to go to the upper band of the trading range towards 11,111 to 11,150 kind of levels.
Quite amazing how everybody's talking about this range and playing in that range. No directional positional bets being taken right now. It is this very tight range that our experts are suggesting. And, well, Chandan and Gaurav Bissa are amongst the best opinions that you can get. So, well, follow that.
What's the point of going against the trend or even trying to guess it?
True, that too. Well, and in which case, maybe stock-specific bets might become very important. So, Gaurav, let's start off with the stock-specific ideas for the day today.
The first recommendation would be buy on Hero Motors, where we've seen a good spike coming in many of the auto names. I'm not saying there's a reversal or the base formation happening or the bottom has done, but for trading per se, it can be a good bet. We have seen short covering yesterday also. We saw about 2% reduction in open interest. That again shows there's some short covering can be expected. A small breakout has been seen. A falling trend line breakout has also been seen. So multiple positives. One can keep a stop loss of around 26.30, 26.20 on the upside. The levels of 27.40, 27.50 is what I would be playing for. Second recommendation would be buy on Analytech. Now this has been in an extended consolidation phase. Yesterday it did come out on daily as well as hourly charts. We've seen a breakout, volume participation decent enough, 2% long positions getting built. So if the current level is sustained, one can expect a good spike coming in the name itself. One can keep a stop loss of 13.20 on the upside. 13.70 is what I would be playing for. There's a discount in the name, so there's a difference between the cash and the future segment. So these are the two names. Also, since you talked about people talking about range, there's one positive that I did not talk about. If you look at the daily charts in the Ichimoku setup, there's a C clamp formation happening. Generally what happens when one of the average, we call it as a Tenkan, once that is crossed, there's a good chance the second average will get tested. So that is coming around levels of 11,240. So in my opinion, the next set of targets will be 11,240. But since we are trading in a range and I don't want to push the view aggressively, otherwise I think if the setup works through, in next 3 days, we should be touching levels of 11,240.
Okay. Chandan, what about you? Your stock ideas?
Yeah, first is buy on Hindustan Unilever, and we are comfortably positive on most of the FMCG counter and recommending from last couple of days. Most of the FMCG like HUL, Dabur, Merico, Pidilite, Asian Paint, Berger Paint looks quite strong. And apart from that, a couple of IT counter and auto stocks are promising in the current market scenario. So first is buy on Hindustan Unilever. The stock is holding its gain, multiple support near to 1800, 1810, and all set to give the breakout from a small pole and flag on the daily and the hourly scale. The stock has given the recent highest daily close with jump in the OI activities. So expecting further momentum towards 1900, one can buy with a stop loss of 1815. Second trade, that is buy on Maruti. We have seen some sort of stability in selective auto counter, especially the Hero Moto and the Maruti. Talking about the Maruti, the stock has completed an inverse head and shoulder pattern which has bullish implication. It has surpassed its falling supply trend line and managed to surpass its 50-day EMA as well. On last trading session, we have seen significant jump in the trading volume. So price formation with data setup suggests up move cannot be ruled out. So expecting this bounce to extend towards 6400, one can buy with a stop loss of 6075. And for selling idea, we are having the Bank of India. We have negative view on most of the PSU banks, and Bank of India is all set to give the breakdown. So one can sell here with a stop loss of 68, downside target towards 62 levels.
All right, gentlemen, just stay on with us. Lots more to discuss with you on individual stocks. But in the meantime, let's go on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we are looking at Interglobe Aviation on the charts, and there's a buy signal coming in on the back of a proprietary Bloomberg indicator, which is the trender indicator. The trender, like I mentioned, is a proprietary Bloomberg indicator, and it basically uses the average true range for the purpose of calculation and helps generate a buy or a sell signal. It also helps manage your stop loss. How do you interpret it? You go long when the trender line flips its color from red to green, and you go short when the trend line changes its color from green to red. In the case of Interglobe Aviation, we've seen that the trend line, which is the one in the red over here, that is at the mark of 1620, and that has been successfully taken out because the stock managed to close at 1631 in yesterday's day of trade. It came close to breaching that mark the day before that, but it did not manage to close above the trend line, which is why we saw the trender flip its color in yesterday's finally after yesterday's day of trade. And historically, as we've seen every time, while the trender may have flipped its color from green to red, that trade has not worked because for the last 1.5 or 2 years, the stock has been in a consistent uptrend. On a year-to-date basis too, the stock is up almost 45%. The big drop that we saw over here when the trender had changed its color was when there was the letter from the promoters Rakesh Gangwal with respect to corporate governance issues and all. But even then, the stock has made a swift recovery. It went back from the levels of sub 1400 to 1600, and now again touching that mark. And the trender too is indicating that there is strength in the up move, and we could see further room on the upside when it comes to Interglobe Aviation.
And how well has this worked in the past?
So Devina, 3 out of the last 5 times that the trender has given a positive call, on an average over the next 1 month period, the stock has managed to run up almost 8%.
Okay, that's not a bad return. Thanks very much for that, Yash. And just talking about aviation, Pankaj, bring you in on that. Is this a space that you'll even consider?
So at this point in time, we don't have a coverage on the entire aviation space, but I think the key challenge again would be what we have seen globally is that there is a norm for auctioning of public slots, and I think a lot of business model will sort of will get tweaked if the government goes and adopts that kind of a form. And which is why I think till the time that does not happen, I think we would not be sort of touching aviation. Though I think the crude oil prices have corrected and are likely to remain soft, and then you have Jet Airways moving out of business, so that is sort of helping the existing players. But I think this structural problem needs to be sort of addressed, at least from the policy perspective, before we sort of look at this space.
Okay. Chandan, do you look at charts as well as derivative positions? What about Interglobe Aviation or maybe even a SpiceJet?
Yeah, we are positive on the Indigo or SpiceJet is now coming into this activity as well. The volume started to shift higher in the counter. First talking about the Indigo, recently 2 days, 3 days back, the stock has surpassed its falling supply trend line on the daily scale, and it is all set to head towards the new high territory Already the supports are shifting higher. We have seen some buying activity in the counter. So I think some uptick cannot be rolled out. 1600 is the immediate support, and slow and steady, the stock has potential to move to our 1675 to 1700 levels.
Okay. So, well, there's a bit of a consensus out here for Interglobe Aviation at least, so do watch out for that. The other one, two or three names which are in news today. HDL, by the way, remember, I mean, it's a tiny toon stock, but into NCLT, into IBC at the recommendation of INCLAT. So that one is in focus. Deepak Nitrite, wherein the long-term ratings have been upgraded. Let's wait and watch if that reacts positively. And apparently, the promoter Diageo bought some shares in United Spirits yesterday. Small amount, but only 33 lakh shares. But still, that could maybe keep this stock in focus as well. Yesterday, we had somebody who was talking about how he's optimistic on the liquor space. Pankaj, do you guys cover Radico, United Spirits, United Breweries, or any of the others?
So we cover both United Breweries and United Spirits, and we have a positive outlook on both the stocks. I think for United Spirits, I think the company is consciously moving towards asset-light kind of a strategy, and I think which is why structurally we are seeing margins improving. We believe that the scope for margin improvement is further there, and with the company going to focus on premium as a segment. So I think this space looks quite sort of stable from the overall volatility perspective, and I think though this quarter was soft for United Breweries, but I think overall despite stiff valuation, I think this is one space investors can look at from a longer term perspective.
All right, that's United Spirits there. We're about 3 minutes from market pre-open. The other pocket, Gaurav, Bissa, I think a CEAT over the last two trading sessions, and probably you can come in on the other tire companies as well. They've been active in the last two trading sessions. Any technical levels that any of these have breached that you can probably take a trade on?
Well, CAT is one that we had also recommended to our clients yesterday. One can still buy as long as it's trading above the levels of 880. There's a chance that we may see a small spike. I would not again call it as a bottom, but there can be a spike towards the level of 905, 910. One can keep a stop loss of 870 and be long in the name.
Ultratech Cement also saw a slump of about 3% in trade yesterday. Pankaj Pandey, what would you do with an Ultratech Cement now and the pocket as a whole? Does it find place in the portfolio?
I think cement as a space is quite attractive given the fact that this year most of the stocks have not really performed. I think this entire space looks attractive given the fact that we would expect that the ordering and tendering activity to start picking up in subsequent months. And I think so from that perspective, all the players or most of the players are looking attractive to us, including Ultratech. I think we would expect a better volume growth going forward. Though last quarter we had seen one of the best margins, largely driven by prices, but we would expect volume growth to sort of look up. And I think from the kind of performance perspective, since the stocks have not performed, I think this is a good play to sort of look at, given the fact that the government is looking to sort of drive the investment spend going forward. So this space largely looks attractive. We like Ultratech, we like Ramco Cement. In mid-cap space, we like something like Sagar Cement. So all these companies is what we are positive on.
You know, post the market open, I would want to talk to Pankaj about two or three names which have hit 52-week lows and are correcting quite viciously. They've been a Parag Milk Foods right out there. And then NCC, I remember when this whole Telangana issue happened and the order cancellation issues came in, the stock was maybe at 1995. Management expressed confidence about things and they may well turn out to be true, but the stock is at 58 now. That's a 40% erosion at a point of time when the numbers may not have looked horrendous. So the couple of names that are very pertinent to be spoken about because a lot of retail investors are still invested in these names.
Yeah, and we'll get their views on that, but also keep in mind that you've got the rupee inching towards 72. Yesterday's close was, I think, 71.71 or 71.72. So we're very close to getting back towards 72, and the yields at about 6.59, 10-year yields, which are starting to spike again, is something to keep an eye out on. Asia as a pocket, more mixed bag. SGX Nifty is indicating a slightly slower start. Pre-open ticks are up on your screens right now. Nifty is showing you an uptick right now, but again, very volatile. You've got big volatile moves at the start. So starting off first with some of the gainers then. And we're talking about Wipro and doing well in this session. And one of the cheapest stocks there. ITs have pocketed well yesterday. Last few days, safer haven names are garnering a lot of favor. GAIL is up about 1%, NTPC is up about 0.5%. Eicher Motors missed the move that we saw yesterday within the rest of the OEMs. Today's session, Eicher Motors has started about 2% higher within the pre-open session. HDFC Twins are doing really well, but I don't know whether they sustain these prices of 5% for HDFC and another 9% for HDFC Bank or 8% for HDFC Bank. These look slightly unnatural. Power Grid is up. Yes Bank's marginal recovery, and Maruti Suzuki too once again opens positive, so by 0.25% there. Losers, Dr. Reddy's. We've been talking about those 8 observations at the Dwara plant, but no material impact, but just the stock is open lower right now. Indiabulls Housing Finance and some of the other losers include the likes from the metals pack and Bharti Infratel, which is down about 0.75%. Some strength in the currency today, so about 71.48 is what you've got on the rupee to the dollar. We'll wait and watch in just a few moments. I think the bond yields should also come up, and we'll be able to track them for you. 6.59 was the yield in yesterday's close. We'll see how that shapes up.
Yeah, well, if a stimulus comes about, then as Jayesh Mehta had said earlier, maybe anticipated going all the way to 6.75. For now, steady. Let's wait and watch what happens.
The banks, Neeraj, when we were talking about the currency moving to about 68, the yields, sorry, when they had started to come down, we were talking about how the treasury gains will impact them, and now we're talking about treasury losses.
Maybe, yeah, could come about. Let's wait and watch. By the way, I must say that this loss on Dr. Reddy seems a bit unnatural because it's not that bad a piece of news. It may correct. I don't know if it'll correct 7% or not, but it's not that bad. Dwara doesn't really do too much right now in the areas that have been done. So let's wait and watch if these rates change, but be careful about this. CGPR corrects another 19%, not surprised there. It may well be different, but I'm just saying that even this move wouldn't surprise anybody. HDIL 7.5% lower into IBC. There is some weakness in Jet Airways yet again, down about 5%. That aside, not too many stocks. SL Propack is correcting another 3%. What's doing well, if anything? Coffee Day, if that's up about 5% United Spirits about 2%. And Eicher Motors, yesterday's loser, maybe gaining about a couple of percentage points. Let's wait and watch what happens here. Okay, some stocks that we need to talk about. Actually, Pankaj, do you have Dr. Reddy's within your coverage? This announcement that came in yesterday, is it that big a negative?
So overall, I think pharma space, I think this quarter was particularly good given the fact that we've seen growth across geographies, and for something like Dr. Reddy's, I think the kind of roadmap what they've given for margin expansion, I think so they are sort of performing on the expected lines. So while this might be a slightly negative news, but overall I think pharma as a space is something with the kind of correction what we have seen can be looked up for investing purpose, because I think we expect that the overall rebound to sort of sustain across geographies, and something like Dr. Reddy's looks attractive to us. I think besides that, something like Torrent Pharma is also quite attractive. Biocon also is attractive to us. Only the fact that it will become a holding company if the biologics sort of gets listed. But pharma as a space has seen quite a good rebound in earnings in this particular quarter, except for something like Cipla, where the domestic growth was anemic. So largely, I think most of the pharma names are looking attractive at current levels.
Okay, Dr. Reddy's would be an individual stock in focus. Let's wait and watch what happens there at the end of the pre-open session. We will indeed watch out for that. A couple of other stocks that I wanted to talk about. NCC, Gaurav, Bissa, if you look at the charts, if not just the other positions, how does it look? It's been on a corrective move now for a while.
Well, yes, it has been breaking crucial support areas. It hasn't breaching downside, and the momentum still looks weak. If somebody has in the portfolio, or if somebody has bought earlier, it is time to exit it. There's a strong breakdown that we saw below levels of around 65, 66. So any jump towards those levels would again be used to again see some more pressure. So in my opinion, this is a name that one should be hesitating. When a stock corrects so much, and if somebody intends to buy when there's a base formation happening, buy at the high levels. Don't buy just because it has fallen from say 100 rupees to around 60 rupees. That should not be the criteria. So this is a name that should be avoided. It is looking still very dangerous.
Okay, looking slightly skittish is this one, NCC. Let's wait and watch what happens there. A couple of these names, Pankaj, Pandey, if you track them, NCC, and what's the fundamental call there? Or a Parag Milk, which is also corrected quite viciously the last few days.
On Parag Milk, we don't have a view, we don't cover the stock, but on NCC, we have a positive outlook on the stock. I think the kind of weakness what we are seeing in the stock is largely because of the AP issue. So they have got about order book of about 18,000 odd crores. About 6,000 odd crores is already cancelled, so it does not have an impact on the. It has an impact on the P&L, but not on the balance sheet. I think 6,000 crore is something which is sort of stuck and which could take about a quarter or two in terms of to get it resolved. So till the time it does not get resolved, I think you will see pressure on the stock. But if somebody can withhold during this period of time, I think the stock is quite attractive, given the fact that even with AP problem, the company does not have any big balance sheet issues. So it is just a P&L challenge which the company is facing because of the change in government in AP, which we expect that should get resolved in a quarter or two. So, but till that time, till this issue does not get resolved, I don't expect a big price performance. But I think with the kind of levels it has gotten to, it is a quite attractive level.
NMDC, that's the other one to watch for. I don't know how it's trading in pre-open right now, but should pull it up to see after yesterday's 8% drop what it does today. I think down about 0.5%. Just a quick chart check before we get Pankaj's views on the fundamentals as well. But NMDC after yesterday's drop, Chandan, Taparia, what would you do?
No, we'll suggest to avoid the counter. The stock has fallen down sharply and in fact making lower top, lower bottom from last 5 weeks. Now it has gone to the multiple support of 88, 89. That is working well, and if that is broken, the stock has potential to even go down towards 75, 72 kind of level. So my suggestion is a small decline towards 88, 89 can further attract it to but down by around more than 10%. So suggestion is better to avoid or initiate the short position or go with the put activities.
Okay. Pankaj, what did you make out of yesterday's announcement and the implications for NMDC?
So earlier on NMDC we had a target price of 115. Now we have sort of cut down the target price to about 95, so 20 rupees cut. I think the challenge is that with the cancellation of this mine, there is a possibility that the other mines also might sort of get reviewed. And coupled with the fact that the company is still struggling with the operationalization of their steel plant, I think so with the kind of weakness, I would not suggest people to sort of buy this stock at current levels. I think till the time issues don't get sorted out, I think you will have challenges on the overall volume growth. Plus, if they sort of delay the operationalization of steel plant, that also has challenges. Though the stock has got good dividend yield, but I think one should not be really looking at it from this perspective. I think the stock can face far more challenges given the yesterday's development.
Well, as the pre-open rates settle down, Reddy's is the top loser, but not down 6%, down about 2 percentage points. So keep that at the back of your mind. BPCL down about a couple of percentage points. Vedanta corrects yet again, but marginally at that. But Maruti, importantly, is still in the green, 6223. Remember, I think it is Chandan Taparia's one of his top calls for the morning. And that stock is starting off well. Let's see if there is more in store there. I would love to revisit that, but the one that I want to talk about is State Bank of India. So viewers, remember, Chandan has already given a bullish call on Maruti Suzuki. I want to ask you, Chandan, if you would have a call on State Bank of India. Very quietly and surreptitiously, it slipped lower the last few days. 1 month return, negative 20%. What does one do here if somebody has an open position in State Bank of India?
So my suggestion is better to exit as of now or buy only if it sustains about 290, 92 levels. The stock which was having some strength earlier has broken all the level and trading below all immediate moving averages. So I think immediate weakness is clearly visible, and in fact we are having the sell ideas on Bank India, Bank of Baroda. So my suggestion is better to exit and hold below 280 may take it to further lower levels. About 290, 92 only I'll revisit for any bottom out process in the SBI.
Okay. Stay on, gentlemen. We're just minutes away from market opening. And we'll tell you all that you need to know to stay ahead and trade today. India's largest iron ore miner, NMDC, has sought relief from the central government after Karnataka government decided not to extend the lease for the Donamalai mine, despite the state's high court ruling in favor of the company.
Dr. Reddy receives 8 Form 483 observations from the US FDA for its Vizag Unit 1.
ICRA grades Deepak Nitrate's long ratings to AA- from A+. Outlook moves to stable from positive.
Macquarie upgrades Mahanagar Gas, raises price target to 950 rupees from 815 rupees per share earlier. The brokerage says BG Asia Pacific Holdings stake sale has removed the overhang on the counter.
HDL gets admitted under Insolvency and Bankruptcy Code as per NCLAT order. The order comes after Bank of India filed an application.
And in key bulk deals, Fidelity Funds acquire 0.51% stake in Hindustan Oil Exploration at 102.5 rupees per share. Well, that's the view on HOEC. Pankaj, let's ask you for your top recommendation before we let you go. One key recommendation from your end, something that you're convinced that you will buy right now.
So there are a couple of stocks which we are still positive on. So in large caps, we still like SBI, even though the stock has corrected about 20% in the last month. Then L&T is something which we like. I think on the mid cap space, we like Trend. I think the company has been sort of doing the entire right things over a period of time. And now they are sort of scaling up in terms of store expansion. So post results, I think we are even more positive on stock like this. So these would be the stocks which we like.
Okay, got that. While we've spoken about some of your stock ideas, Gaurav, Bissa, just want to add in an Eicher Motors to that. Yesterday's session was the only outlier amongst the auto pack that didn't do well. Today is trying to have a cover up of yesterday's losses. But would you be a buyer at 16,000?
No, it's at a crucial level. There is some supported levels of 15,750, 15,700, but then it does not garner a buy for me. The risk score is not favorable. If it slips below 15,700, we can see another round of selling happening. So for me, it's an avoid. Such stocks, as I mentioned earlier, should be bought at higher levels when you have higher degree of confidence that some sort of short-term base is being formed. So for me, it's an avoid.
Pankaj, just while we've already spoken about Yes Bank, for somebody who holds a Yes Bank in their portfolio, has depleted 50% of the value there. If the recommendation is to exit and take losses, what is the alternative to make sure that even at a steady pace, the cover up of those losses can happen and decent enough returns can be seen from a longer term horizon, maybe 1 year down the line?
So I think from a next 1 year perspective, I think within banks, I think tier 1 banks like SBI and Axis Bank post corrections are looking good. While there is some bit of a slippage, what we have seen in case of, say, for example, SBI, and also we did not see the kind of yield or treasury gains. But our hope is that going forward, all these would sort of come. And I think with the kind of correction, I think this is what an investor can look at because I think on the Yes Bank, things are still fluid. So we still don't have a good sense of the kind of gross NPAs the bank would be sitting on.
All right. Minute left to go for market opening. Let's get those top calls going from our technical experts. Chandan, Taparia, let's start off with you.
Yeah, I'll be with Maruti. The stock has surpassed its falling supply trend line, forming a positive price pattern. So recommending to buy with a stop loss of 6075 and expecting it to move towards 6400 kind of levels.
Gaurav, Bissa, what about your top call?
My recommendation would be on Hero Motors with the kind of data it has seen, the breakout it has seen. When we keep a stop loss of 2630 on the upside, 2740 is what I would be playing for.
Okay, gentlemen, stay on. We'll just take in an opening thought from you before we let you go. So just stay on for a moment post the market open. But the markets may start off on a very flat note. We may not have too much to say as far as the index levels go. I think the key would be what specific stocks do in a session today. Penultimate day to expiry, everybody will be watching out for. If there is some bit of movement in the second half of trade, in the run-up to the expiry tomorrow. So that is something that you got to monitor. The start will be very, very flat. No surprise there. 2 points lower for the Nifty. The Sensex about 48 odd points or 28 odd points. Nifty Bank about 10 odd points. So hardly any move there on the index. The mid cap and the small cap indices should come up on your screen. I doubt that there'll be big moves there. No, there aren't. The small cap index is lying absolutely flat. Mid cap index down about 0.16%. So hardly any moves there too. What about specific stocks? Let's get the heat map up for the Nifty 50. More red than green, but except for Yes Bank and not too many big losers. I'll come to the losers in a bit. Firstly, the gainers. Eicher Motors, Maruti, well, seems like another good start for the auto names because even M&M and Bajaj Auto are in the green. Not a big move, but in the green nevertheless. Infosys in the green. SBI marginally in the green. But that's about it. The losers, overwhelmingly the larger variety here. So yes, larger pack here. Yes Bank down another 3.5%. Britannia, something's plagued this one. It was down about 3.5% yesterday as well. Another 2.5% gone. Dr. Reddy's is down about 2.5%. Indiabulls Housing about 1.5%. BPCL 1.5%. Hindalco, IOC, Vedanta are stocks with 1% losses. But it's Yes Bank, Britannia and Dr. Reddy's. Arguably the top three names. And when Yes Bank is down, Indiabulls Housing Finance is also following about 1.5%. So those are the four names that you need to monitor in the session today. If you are an index stock watcher, Britannia down about 3%. Quickly, couple of pockets of weakness. Stocks which have lost a bit yesterday. Stocks which are trading close to 52-week lows if we just get them on the screen. So yesterday's top losers, NMDC recovers a little bit. Crompton Greaves Power doesn't. Edelweiss doesn't. Both of them correct. Then, what about companies which are trading near 52-week lows? Parag Milk, Nagarjuna Construction, MRPL, and they continue to slide lower. So hardly any respite. And the Nifty Bank right now is down about 52 odd points. Devina, are there any stocks that stand out?
Well, starting off first, obviously, we spoke about how some of these names have picked up. Coffee Day over the last few days has done okay for itself. 5% in today's trade as well. You've got Igarshi, which is doing well today. That stock's up about 4.5%. The likes of Mahindra CIE, that's up 4% in this session. And NMDC recovers from yesterday's losses, about 3.5% higher. Biocon's up 2.5%. And United Spirits, we just spoke about Diageo picking up some more stake. The stock's up 2.8 odd %. Time Technoplast, Alembic Pharma, these are some of the names that are active from the liquor space. Even Radico Ketan does okay. And Havells has been seeing a decent move after the recent correction that it saw from levels of about 735. Amongst the bigger losers, because the tilt is still towards the negative side at open. CG Power, we spoke about that one. Oberoi Realty loses 5.5% right now. Then you've got the likes of Wellspun India, Edelweiss, we already spoke about that, but there's some market chatter of possible default there, but it's just market chatter. Future Consumer, Lakshmi Vilas Bank, that's down about 2.5 odd %. Indiabulls Real Estate is down 2.5% as well. But 643 stocks open the day in the red. You've got about 419 stocks which starting off in the green.
Yeah, Britannia is down 3.5. Quick funda and technical view both. Gaurav, Bissa to you first on Britannia.
Well, I was positive on Britannia, but now it has been breaking crucial support area. It has become a sell-on rise, and it jumped towards the 2400 or 2350 for that matter can be utilized to create fresh short positions. Not at the current prices, but if somebody has already sold, then keep riding it. But fresh entry and a jump towards 2050 can be used to create fresh shorts.
Okay. Actually, quick opening thoughts from you, Chandan, Taparia, before we take in the final fundamental review in Britannia. Anything that stands out for you? Or a view on the index as we start off?
Yep, look at the market, just it's in a range, and I think if it comes near to 10,970 zone, then again buying interest could be seen with support of 10,935. So it seems that some kind of range bound bias could be seen. Follow-up is required, but I think support could be hold. And good part is that couple of other names like Infosys, TCS have seen some buying interest. So one can look at opportunity over there as well.
Okay. Pankaj, a view on Britannia Industries, down 3% today, has been correcting for a while now.
So largely we don't cover this stock, but I think volume growth of 4% is one of the lowest what we have seen in the entire FMCG as a pack, and coupled with that, the outlook also is not that bright. So which is why, but I think We like something like Nestle and Marico, wherein the volume growth is expected to be good. For Marico, we expect a decent amount of margin expansion given the fact that the copra prices have corrected. So company will use that to its advantage. So these are the names which we sort of prefer in the FMCG space.
All right, gentlemen, we leave it at that. Thank you so very much, Pankaj, Gaurav, as well as Chandan for joining us this morning. And bringing in an important voice this morning, Andrew Holland, CEO at Avendus Capital Alternate Strategies, is joining us on the show. Good to have you after some time, Andrew. Things haven't really changed much from a market standpoint. In fact, just worsened a bit, I would assume, at least on the global front. What's the take now, and what would the approach be?
Well, I think we're all kind of just waiting, right? It's waiting for what government action may be on certain industries, obviously the tax and long-term capital gains tax. So, can only hope that that's coming soon. But the longer we leave it, the more worried we're going to get about it. So, I think we've been helped more recently, by global markets on the expectation that interest rates are going to fall. And that's really what the expectation will be. So that's the kind of a tailwind for us. But the longer we leave the economy to its own devices, then I think it's going to be harder to kind of shift sentiment in the very short term. So I've been talking to a lot of people, particularly mid and small sized companies, and they say they're in a tunnel and they just can't see any light for a long time. So that's where the sentiment is, and that feeds upon itself. So I think the sooner we have any sort of package or no package, just let us know so we can all move forward.
All right, so while the anticipation and the hope is there that there will be something announced, let's for once believe that it's left as is, as was announced in the budget, and nothing really changes. What happens then? Because earnings have dropped, we've not really seen a pickup. Most brokerages have downgraded their earnings estimate for FY20. They brought it down to now from 25% earlier on to about 20% now. What would the approach change? How will it change then? Would it still be a wait and watch stance? Or would the thought process be to take this as an opportunity, start doing SIPs, start nibbling in slowly?
Well, there's always that expectation of trying to find the bottom, but it depends where you think the bottom is. First of all, I think 20% earnings growth is wildly optimistic, even if they give a package. So we're at more between 10 to 15. So anyway, I think the street has to kind of cut forecasts. So if there's nothing happening, then they will do that. That's for sure. And then obviously we're on a higher P than we should be, and therefore the markets have to correct. And if you don't have the global backdrop of support. Now, if you just think about it, when we had our problems in July and the market fell by nearly 10% since the budget, global markets were all doing very well because interest rates were falling, so we didn't participate in that. So to participate, we have to show that we're moving forward as well. So that would be my concern, is that we'd all be thinking about what's the next level for the market, and everyone would just continue to fly to safety. So it would continue to be those 5 to 10 stocks which have held up the market for so long.
Actually, I have a follow-up on that too. But Andrew, good morning, Neeraj here. And again, as Devina said, good having you after a while.
Morning.
Just wondering, Andrew, if indeed the government does give some bit of leeway on taxation, be it the surcharge, be it something else, will that be a good enough reason for a large money bag like you to go out shopping seriously? Or is the slowing economy concern enough to hold back on the ammo because there might be better opportunities that could arise?
No, I think this too. So let's take what I think will happen globally. And I think globally we're all convinced that US is heading towards, spiraling towards recession. So interest rates will fall. They'll fall in Europe. They'll fall everywhere else. It'll fall here, and that will be good in the very short term for equities. So we want to try and participate in that if we can. Now, if, as you just said, there is kind of some rethink to help the economy or kind of reduce the burden on tax, then what I think investors will think is here's a government that's listened and taken corrective action, and we'll all be a lot happier for that. I think corporates will then feel that they can start thinking about sales growth improving going forward, and therefore we'll think more about capex. So it's a bit of a India is a great market. We're either super bullish or super bearish. We're never kind of in between, and at the moment we're in that super bearish mood. So we need to shift that kind of sentiment. I don't think it takes a lot. I don't think anyone's there's a lot of sectors out there still doing okay, but obviously it's the small and medium-sized businesses which are suffering more because of cash flow problems, whether that's GST, nothing to do with what was said in the budget. So maybe just a lowering of GST to one slab, for 1 year, doing something which will just get the economy moving. I think would be welcomed by all, and I think would get the economy back on track.
It's astounding the way the street is split between this limited window GST cut coming in for maybe autos or some other pockets versus what happens to real estate. By the way, the other point that Andrew made is very interesting, and there is a fantastic study done, or a chart study done by JP Morgan, I think, which lays out that whenever this inversion of the yield curves has happened, the period of recession for the markets is a good 11 months away. And the past 2 times that it has happened, there is a significant period before which the markets start to correct. And the point that Andrew was making right now, that if indeed the US spirals towards recession and the interest rates get cut, then you might actually have equities rising and one would want to participate out there. So Andrew, how do you, this is the chart that I was talking about, and it lays it out very, very beautifully in terms of how the markets have done even when these signals have come in. But Andrew, how does one participate then? You mentioned about this flocking towards the top 10 names. We just did a study today which showed that every time there is peak polarization of the top 10 stocks accounting for over 60% of the weightage, the subsequent rally that happens has the bottom 30 stocks in the Nifty participate, and not quite, better than the top 10. So my question to you is, for here on, for the next 1 year, would you look to buy value, or are you parking yourself in the tried and tested?
So I think we're all trying to, think about that scenario. And you're absolutely right. I've seen studies as well saying that if you take the bottom 40 Nifty companies, they're on an index of the equivalent of 9,000. So we know that the broad market is cheap, right? And that's not what we're worried about. Is what's going to be the catalyst to get that going. And because the economy is slowing and sentiment's so bad, it's the operational gearing of domestic-driven companies which hurt them, and that's all going to be below the top, the top companies in each of the sectors. I'm not saying there's top 10 in the Nifty, but the top companies in each of the sectors, and that's what we're seeing. So you're right. If we have a rally, if the government do some of the right steps, then it's going to be the broader market. Those 10 will still rise. But you know what? The other 40 is going to rise a lot quicker. So that's where you're going to see a lot of concentration of money if that was to happen. And obviously, we'd want to participate in that.
All right. Interesting point. However, US, you've not really seen a bear market for the last 10 years. So even at any point of inversion, if you've gone to see, the market has still steadily progressed higher. And these are different times. I think in the last 1 year, there has been one more instance where we were on the brink of, or whether they actually had a yield curve inversion. But at that time, and like this time as well, the underlying is different. The undertone of the environment is different. The global economy is changing. So it may not actually translate into a full-blown recession, according to some that we have conversations with. But Andrew, in terms of specific pockets, again, the same question like Neeraj, even in terms of sectoral picks and what you'd like to invest in, does that change with regards to how these sectors have been beaten down versus how some of the tried and tested financial names have done?
No, it's really, stick to the quality. It's paying you to do so. That they're obviously, in each of the sectors you can see they're taking market share. Yeah, the sales might be a little bit lower than than they were before. But compared to the rest of the industry, that it's superb results. But this is not an India problem alone. This is the same in the US and other markets as well. But there's one point I just want to bring up on your yield inversion, and the concern I have about this is not. See, I'm a great believer in it, but everyone's saying it's this time it's different. It's different this time around. It never usually is. I just don't think a lot of people remember what a recession actually looks like, because we've only had a financial recession. That was in 2008. It wasn't an economic recession. And I think the challenges will be a lot different than what you saw with a financial recession, where you can throw money at it. You can't do that necessarily for an economic downturn.
A very important point, and yeah, maybe Andrew's seen that. A lot of modern day money managers may not have even seen that. Andrew, just one last question then. If that is indeed your view, the other view that is being browbeaten right now is that the valuations for the broader end of the spectrum, the small caps and the mid caps, have reached levels from where they have typically bounced back. Do you see fundamental reason to go out and buy those companies at a point of time when we are, as you said, looking at the economic recessionary scenario, if not an actual recession in India?
You're right. I mean, I speak to a lot of investors, and they're asking the same question. Should we dip our toes now or should we wait? My view is you can wait to see if there's a package or not, because if there is, yes, you'll get a bit of a rebound. But you can be quick and nimble enough to get into start up a SIP in a mutual fund, not on small and mid cap mutual funds. That's simple to do. But I think at the moment everyone's just thinking, cash might be king in the very, very short term, and just waiting to move from the sidelines. So everyone's looking at exactly what you said, and I think once they feel confidence to do that, and that goes back to what we talked about at the beginning in terms of any government package or help or incentives, I think will push people towards doing that.
Andrew Holland, always a pleasure having you. Thank you so much for joining us with your views today and giving us your thoughts.
Thank you.
All right, that's an important market view. Andrew Holland of Avendus with his thoughts on what could happen. Remember, they get impacted by that surcharge, but he's saying that even if the surcharge gets reversed, there might be a case for participating, but the larger theory is falling rates and the resultant rise in equities, and not necessarily just an impact of a surcharge being withdrawn. Take a break. The other thing that is plaguing the markets aside of sentiment is earnings. Maybe they are the precursor to the low sentiment. The growth remains elusive in Q1. We talk about the overarching trends behind the earnings downgrades with Suhas Harinarayanan of JM Financial.